Good morning, everyone. It is Friday, September 23rd, and look at what we've done here. We have now, yesterday, we came back up and tested this trend line, and we talked about whether or not this would hold to the upside. Another area we were talking about in the SPY, you can see here, we have it drawn in at right around 375, and we were hanging out there yesterday. We did dip a little below, but this is what we were talking about. This gap down here. So I'm going to go ahead and open this up so you can see it a little better. There we go. Okay, this gap down here. And we talked about, I think it was Joe Moji and I, and you're probably Edie, because we always talk about filling these darn gaps, especially when we're this close. Just go ahead and do it. Well, we did it this morning in pre-market, and you can see that right here. This is that gap. Okay, so we filled it pre-market. Now, this doesn't mean anything filling it pre-market, because if we don't fill it in the regular market, you're still going to have a gap in the chart. But what I guess the point of this is the indexes in particular very rarely leave gaps. Sometimes they do, but very rarely do they leave gaps. So hopefully, and I know that sounds terrible to say this, but hopefully we kind of grind around here for another hour and 15 minutes or so we can fill this.
By Russia.
So we can fill this during the market hour and get rid of it. Now, what that does leave is this gap down here at the 359.17 area. So this is a little bit more scary. We are down here at our, so this is in the SPY, we are down here at our July lows. This is the June low that we've been really focused on a lot lately. And I'm going to go ahead and pull this out a little further. Actually, I'll put it on a weekly chart for you. Okay, so this is the gap we're filling. This is the gap that's just below. This is June. So this is the pandemic low. This marker, this yellow line, will take us to this little bit lower of a gap. We have two gaps down here, actually. A little bit lower of the lower gap, which is the full pandemic move. So funny how charts tend to do this. But what this is setting up, potentially more long-term, is, if we put in and test this low double bottom, potentially, is what we might be looking at here. And if we hold that June low, that would then set us up for maybe a grind. Now, what is happening in our market that's causing all of this? Well, we have a lot going on. Geopolitically, we have problems with Russia, with China. We don't have a problem with Taiwan, but China does, which kind of then translates to being our problem too. So just a lot geopolitically going on. The Russia-Ukraine war, of course. A lot of back and forth, and it is just, you can see up there on the right of your screen that, there's been a lot of rhetoric. Well, I don't want to get into all that because I have a whole thought about Russia, but that we'll probably have to do in a non-market watch sort of video. But anyway, so we have a lot going on. And we constantly see throughout China, lockdowns come and go because they have this stupid, and yes, I said stupid, zero COVID policy. It's like saying, you know what, we're going to have a zero cold policy. If you have a cold, we're going to shut everything down. It's just dumb. But anyway, no one asked me. So here we are in the market. Interest rates, when we heard Powell talk, the market initially was like, okay, we expected 75 basis points. That was pretty much baked in. But then he went on to say that we are going to hit these as hard and as fast as possible and get the interest rates so that we get the terminal rate to like I think 4.4% is what they said. They might as well say 4.5. But anyway, which, that kind of rhetoric has really spooked the markets. Now, throughout the last several months, these large firms, hedge funds, investment banking, they have taken more and more risk off, right? So we talked yesterday about the VIX and that the VIX is not maybe quite as high as we would expect. Typically, like when we saw this, drop in the market, look at what happened to the VIX at the same point, right? So this was, wait, where are we? Let me go back to a daily. That'd be a lot easier. Sorry, I should have planned that a little better. Here we go. So if we go back to earlier this year, right, as we came off highs right after the first of the year. That, you know, it was like the first couple trading sessions of the year. We hit those highs in the market, and then all of a sudden, as we started to crash, here we go. Look at this, up in the 30s, 36, right? So these are the big areas, and we're not here. And we've talked a lot about why that is. And I heard, you know, one of the best explanations this morning about it too was because all year we have been, well, but analysts, not so much we, but analysts have been talking about the fear of recession. When some people think we're already in one, I tend to think that we have recessionary areas, but we're not in a full-blown recession yet. I think the Fed is going to, you know, they are holding our hands and pulling us right into one. But because of that, and because of all of that sort of forward looking, especially people who watch the bond market, they've taken risk off. So with that, the VIX isn't giving us that typical capitulation that we see because it has been slow and steady. And you know, this was the slow and steady down, right? And then still pretty slow and steady moving back up. None of these big wild swings that we saw earlier in the year. And so I think that that is why. I think it is very much just we're prepared for it. People were prepared for it. So going into today, I'm not setting up any new trades. And the reason is because now we're kind of, these moves that we get overnight are really annoying because you can't really play them. And I don't want to chase anything down. So what I recommend today, look at your opening range break. So you can play it off of a 5, and that's great. I'm good with that. But then once we get to like that half hour and 1 hour time in the market, really watch to see what actually holds in, because what we've seen is maybe a market move one way early, but then we reverse. So make sure you either have some stops in, trailing stops, something, in case you can't be at your desk to watch it. But opening range breaks are where I would look today. And maybe just on the indexes, we're down here at a bit of a support level in this. This is the futures. And when we correlate this over into the SPY, we'll be at a little bit of a support level as well. So watch that. And here we go. Here's the Qs, right? And again, we have a little bit more downside in here that I think that we can pull into. But overall, this is our, we're right at a support level, but this will allow us to fill some gaps, which would be really good. Okay, or fill that one gap. So hopefully we hang out here and not make a big move. We have Powell speaking this afternoon. A couple others speak during the day. Yay. Lael Brainerd will be speaking, and Michelle Bowman. So Brainerd, they're all speaking. They must be at a conference together. I don't even know what they're up to, but they're all speaking right around 2 o'clock. So be cautious of that, because that'll take us, you know, right up into our power hour, and we'll see what language that they are used. Are they going to try and smooth things out a little bit? Or are they going to, you know, keep the foot on the gas and, well, I should say keep the throttle forward and ride this all the way to the crash site? There is no more talk really, or there shouldn't be, of a safe landing for the Fed, or I'm sorry, a soft landing. We have long since passed soft landing. I'm looking for just a somewhat safe, controlled crash. And if you ask my husband, he says all landings are controlled crashes. So, okay, there we go. He's a helicopter pilot. That's just how they think. Okay, so that's what I'm looking at today. Bitcoin yesterday was holding in pretty well. We've held this 18,000 level. It pulled back in here as well in futures, but not quite as much as we see in the SPY and the Q. So I think there could be some opportunities in here for some day trades. Look at like Mara, Riot, Hut, BT, right? Yeah, BT. Maybe even just looking at coin. We heard yesterday Robinhood, the SEC will allow them to continue pay for flow, which is really their whole business model. So there are definitely some opportunities there. Although down pre-market, which pretty much everything. Another one that I would come back and watch. Boy, missed the boat on this one yesterday. So we had this big candle, right? Took a pause, huge candle. We're taking another pause inside the top of this candle, but really holding in very well on Cassava Sciences. So again, just momentum plays. and opening range breaks are what I would be watching here. So, okay, if you have any questions, reach out, heatherc@givingtreetrading.com. Again, I will be looking for just day trades today, not looking at taking any swings overnight unless something is very, very obvious in this more, tepid, scary kind of market. All right, reach out, heatherc@givingtreetrading.com, and I'll see you in the chat room.